The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 9th fantastic and fabulous Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, we'll go look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll go try to make hay out of what it is they're communicating to us in this flat market. I'm absolutely grateful for your presence here. I'm here to serve you. So feel free, pick up that phone. We'd love to hear from you. You can call in at 877-927-6648. Internationally, 727-445-1044. This is Fantastic Friday. Of course, it is the Hotel California, sponsored by Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got a flat Dow. She's up 2 points, trading at 17,052. S&P has given back 2 points. That's trading at 2,011. NASDAQ Composite up 9 at 48.19. Russell's up 2.5 points. The DAX closed up 103 points. The FTSE 41 points. Gold is trading up 14 bucks. Silver is up 10 cents. Light sweet crude up 37 pennies. The leader on the way up, dollar-wise in the market, that goes to Regeneron Pharmaceuticals. That's up 1 4/10%. You've got Priceline up $6, trading at $13.10. Illumina, that is up about $6. Helen of Troy, that's up $6 as well. Williams Clayton Energy up about 11%. Amazon up $5 to the downside. Leading the charge is LDR, the leader. LDR Holding Corp down $9.71. Intercept Pharmaceuticals up $9. Biogen down 7. Intercontinental Change. The Ice Group out there, that's off $6. Chipotle running red, down about 6. Panera Bread off $5 as well. Again, 877-927-6648. Of course, the thing that is on the move, what is giving the bears conniption fits today, it is that Euro-Japanese yen. They do not know how to deal with such a strong currency pair out here. This is the currency pair. This is the carry trade inside the U.S. stock market. The direction of this currency, if you go against it, it's just very difficult. Eventually, who's going to win when there is a divergence? It's the currency pair. Now, this is the widest ranging bar we've had inside this currency pair, really since the little downdraft from September 18th that it is going into. That says that what this currency pair is going to do is going to go ahead and hit the descending trend line. And that's coming off of the high out here from June the 9th, then again on June 22nd, and then again on August 21st, August 24th out there. So it looks like this one's running that trend line, may take it out. If it takes it out, what that does, even on the market that wants to pull back, and it does want to pull back, it's coming soon. It's coming to a theater near you. I don't know if there's going to be a movie showing that starts today, or maybe it starts Sunday, Monday, but there is going to be some kind of pullback. And another great signal out here with regard to whether this is just like a buyable dip or not will be, what direction is this currency pair trading in? Well, at this stage here, we don't really have to worry about it. We know this currency pair is trading to the upside. Now, I say an impending market top. Let's take a look, picking up from where I left off this morning when back in that seat for a day. If we take a look at the ES Mini, what we looked at, and because we do this all the time, is we take a look at patterns that help us identify market tops and bottoms. In this case here, we saw price move higher with less relative strength out there. That's what it was doing, and it was also making one of those wonderful seventh wave moves. That's off of the low out here from 4 o'clock in the morning yesterday on October the 8th. So it makes a beautiful topping type pattern. Now what the ES Mini is doing, and no idea whether it's actually going to be able to go ahead and break below a level of very strong support out here. And that's at this 2,000 price. Now the reason I say it's strong support is because if we take a look at the market profiles out here, we can see we got that point of control closer to the bottom of that box out here. If we do see it close below this 2,000 level, I'm not talking 1999.50, but if we do see it close below that, then all we need to do is switch over and see what's going on the 2-hour chart. Let's do that. We also know that there's some strong support as well, but here that support shows up, well, it doesn't really, actually, I take that back. With regard to its support level, it's its old TAS market profile high. That's what we're going to call it. Now you can see price on the 120-minute time frame also moving higher with less relative weakness. Of course, what did it do? It formed that ever important doji candle at resistance. Doji candles have so much meaning at resistance. Elsewhere along the way, But here, and we saw that the leaves were falling off the tree. That went ahead and created this nice little evening star pattern. That is a bearish reversal signal. This says to me, we really ought to see the ES Mini pull back to the 1992 level, 1989, 1986. That's not out of the question. Where the ES Mini starts running into trouble, and by trouble, I just mean a normal retracement. 0.382, 0.618 is if, in fact, it breaks below 1979. No idea whether it's going to do that today. The signals are in, though, that the market wants to take a breather and needs to take a breather and pull back. So the problem and what has delayed the ability is kind of like when you're on an airplane and your flight is delayed because the pilot hasn't shown up. Well, in this case here, that pilot light goes back to that Euro-Japanese yen. It makes it very difficult for the market to get rolling when that currency pair is so strong. If we go take a look at the NASDAQ, we're going to see a similar pattern, not a similar pattern on a 30-minute chart with regard to its wave counts out here, but a similar pattern with regard to moving higher, doing it with less relative weakness. The NASDAQ has got really good support at 43.27. It's a ways away from that. And if it doesn't get down there, if we close in the positive at the end of the day, don't be surprised if on Monday morning you come in, you start to see things that are pulling back a bit out there. And we can take a look at some of those levels as to where it might pull back to. On the 2-hour chart out here, the 2-hour chart, for the NQ, there really is no negative pattern that is in play out here. So this chart says to you and I that, and not, I think this candle here, yeah, this doesn't finish till 2 o'clock. So yeah, if it finishes like that at 2 o'clock, where it doesn't make a new high, it says going into the close at 4, we see another burst move higher. And if we don't see that at the end of today's trading session, we see another boost higher, move higher on Sunday sometime, Sunday early morning, Monday, before it would actually give you a potential signal of a top out there. At least that's what the 2-hour chart inside the NQ shows. Now, that would actually make sense to me, because even though we've got this price relative, the ES Mini's got a different story. It's just as simple as that. So we've got a little bit of divergence between the two. So who is it that is going to win the battle? And a question in the den is, Steve, do you think we test the August 24th low within the next 30 days? Thanks. No, I don't. I don't think that we come back and we test that August 24th low anytime soon. The test was the test from last week, and that test was rejected. Now, when the market, that's based on the market and the information that is provided to us thus far. So I always answer that question based upon the current message of the market. Those people, those individuals, those folks that are subscribers to my newsletter, you listen to the show, you know that I will turn on a dime when that's how good of a steering vehicle I own and operate, which is myself. That's because I am willing to take the next piece of information, especially if it's a critical piece of information that the market gives to us, and go ahead and do what it is that we know what to do out here. So until we get that, I would answer that question is no. We do not go back and test those August 24th lows. Does that mean that we can't or that we won't? Yeah, we can. And we'll see. We know really one step at a time out here. Yeah, quite frankly, until the ES, the NQ, the Dow start breaking below on their 30-minute chart, their their TAS market profiles. I mean, the market's just kind of churning sideways out here. So, anyways, that answer that question real quickly. Now, I do have an email here that a listener requested me to take a look at SNH and STWD. So let's actually just jump in and do that, because we can come back, take a look at these markets, and which we will. We'll take a look at gold for sure. But let's go see what's going on inside these two equities. Now, this is a listener that is looking for a longer-term investment in each of these. And apparently I covered this back on September, is it September what? 10th. I did it on September 10th. Okay, so we're about 30 days in on the deal. So let's take a look at ticker symbol SNH and see where it is that we're at on this. Okay, so SNH. Now, if I didn't show this here, I was going to ask if anybody saw this, but I can't do that. Now, what I'm looking at, I'm going to delete something out here. The ticker symbol S, Senior Housing Properties, I suppose. I don't know what PPTYS stands for. But as we take a look at it, this is actually giving you the biggest buying signal and you have to look at it closely. So I'm trying to blow it up on my screen out here. This actually is giving you one of the largest buying signals that you could ever ask for. And what is that? That's called the island bottom that this has formed. Now, let me see if this is even at all-time lows. Let me just put this on a larger term chart out here. Let's put this on a monthly. No, okay. It's not at all-time lows, but it's at fairly significant lows. Now, just as long as I have this chart up here, I'm just curious, going from low to high, going from low to high, what kind of retracement actually took place? And again, this is a monthly chart that we're looking at right now, which we really should look at a monthly chart to help identify from a longer-term perspective, where this is likely to head to. But right now, I want to go back into the daily time frame out here. And as we switch back to daily, what you're going to notice is an island. What I mean by an island is that at the trading session on August 24th, makes sense, right? This equity gaps down. The low of the prior session was 1655. The high of that August 24th session, 1632. Now, a few trading days ago on Monday, October the 5th, the equity gapped up. The low of that is 1643. The high of the prior session, 1638. So you see that 1638, 1643, that one nickel gap. You might not think that the nickel, maybe you might walk down the street and not pick it up. I would pick up that nickel. And I would also pay attention to the nickel on senior housing, partnership property, whatever it might be out here, SNH, because it created an island bottom because of the gap that is left out here from August 24th and that little nickel gap that is in there from the gap up this week. That is about as bullish as you can get. Now, does that mean that all bullish patterns work? For goodness sakes, no. But it is a pattern that is worth noting. So for this listener that's interested in getting in on SNH from the longer term perspective and is uncertain as to where to get in, well, you've got your signal out here. Just use a wider stop. You see, it's really all about the position size. When we get back from break, let me cover that with you. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is flat, S&P is flat, composites up just slightly, Russell basically flat out here. And we were taking a look at, for one of our listeners, senior housing properties. Ticker symbol is SNH. Now, when you are looking for a, look, ideally, I get this. Everybody would like to buy the bottom tick. I mean, who wouldn't? I can't tell you the thousands upon thousands upon thousands upon thousands. It's not millions, but it's the thousands of trades that I have placed in my lifetime. And I can tell you that only once can I recall actually getting the bottom tick out there. Now, maybe you might say, hey, Steve-O, you're just not that good. I get the bottom tick all the time. Look, let's take a look at it like this. If you're looking to get into something from a longer-term standpoint, you believe in it fundamentally, you believe in it technically, you find some kind of bullish reversal pattern, such as a island bottom, a huge island bottom out there. Trading and investing is about keeping it simple. The KISS theory, keep it simple, Steve. So I want to give you the keep it simple Steve theory because trading and investing is all about risk. It's all about managing risk. And the way that you manage risk is by proper position sizing. There is there's nothing more valuable than proper position sizing. If you always use proper position sizing, you will always be in this game, and you can make extraordinary money position sizing properly. What is position sizing? Let's assume, for our purposes, that you're starting with a balance of $100,000. That's what it is that you're managing. You really should not have to risk more than 1% on any trade. $100,000 times 1% is $1,000. So $1,000 is all you need to risk on ticker symbol SNH. Now, by risk, I don't mean the value of the number of shares that you own. I mean the risk because you're going to use a one cancels other order, hard and true. If you don't know how to use a one cancel other order in your trading strategy, just get in touch with those folks out there. They'll teach you how to do that. And I want you to do that because it's the time that you're the most objective. That's number one. Number two, you know that you're going to risk $1,000. Let's say we don't know if this thing's going to pull back or not. I can give you areas where it may pull back to, but it's trading at $17. It's an island bottom reversal. And that says that that low should hold. It should not even get taken out. So let's say we're trading at 17. The bottom of that is just above 15. We'll call it $15. We have a $2 stop that's in place. You take the $1,000, you divide it by 2, and that tells you exactly how many shares to buy. That, in essence, is, we'll call it step number 2. So this says buy 500 shares. You can buy it today. You put a stop in of $2 out there. Now, 500 shares times $17 is going to be what? It's going to be about $7,500, give or take out there, right? Somewhere in that range. It's going to be less than 10% of your total portfolio. That's the other thing that I would look at, is make sure that no one individual stock is more than 10%. If it's 11%, it's no sweat. Just make sure it's not 20 or 30% out there. So in this case here, if you're interested in buying SNH, don't sweat trying to figure out exactly where this is going to pull back to or anything. Use a wider stop. If this thing continues to move higher, you can go ahead and add to it. You can use a similar type principle out there. But in anything that you're trading, if you're trading stocks that are penny-ish type stocks, so I'm going to call them, less than $5 or a dollar stock or something like that, the trade on that is so easy and so simple. Because you do the same thing. You say it's a dollar stock. You go ahead and you buy it at $1. Your stop is going to be there out of business and bankrupt. You just take 1% of your total portfolio, and that's what you risk, and you figure out how many shares, position size. And if you do that, you won't have to sweat the small stuff. Now, the question of, hey, where may this pull back to, or where is it going? I would say at this stage, let's go ahead and use one of those cool features that we've got. Let's take a look at our TAS market profiles. They're very helpful in also identifying areas of resistance. And if we look at the weekly time frame, we've got a daily chart on my screen, says that SNH ought to get up to 1747, ought to find a little bit of resistance at 1747. If by any chance this pulls back into about the 1647 level, 1632, even if it violates the island bottom by closing that little nickel gap out there, hey, so be it. But that would be another buy area. But I say this, because of that bullish reversal signal, offers you such ease in being able to enter and not have to really worry where, whether you've bought it at the exact right price or not out there. So consider that in your trading investing. Hopefully that helps you out. There was another ticker symbol to look at, STWD. I believe that's Starwood Properties out here, STWD. So when we get back from this break, let's go take a look at Starwood. This one doesn't have an island at the bottom and looks like it's up against some resistance right now. STWD. Steve Rhodes with TFNN. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I want to do one more thing on that S&H senior housing properties out there, because I mentioned the one cancels other order out there. And it's really the Ron Popeil method. It's an excellent method, by the way, for trading and investing. You see, the time when you are most objective about any trade is the moment before you place that trade. In fact, it's several moments before you place that trade. And you should always have protection on the upside and the downside. You can always go in and change that. And so in this case here, with regard to senior housing properties, if you got a $2 stop, if you're looking at it from the long term, I'd also like you to have an exit strategy in place. Everything that you do in life ought to have an exit strategy, at least when it comes to managing money out here. And that says 2216 is the number I'd be looking for. It just simply stands out as a high volume bar. It's way back here from the trading day of February 4th. No idea what caused it. I don't really care. I just know that those people at $22.04 between 2216, actually I guess it is, and 2277, somewhere around there, 2216, I said 2204, 2216 and 2277. The stock's trading at 17 bucks. I guarantee you there's a handful, more than a handful, that if this equity gets back to that price, they're going to say, they're going to kiss their lucky stars. They're going to use the KISS theory as well, and they're going to just want to get their moolah back out there. So hopefully that's just and remember, when you're trading and investing out here, I've asked this question of folks when I get emails or calls from traders and investors, just like you, and sometimes I'll get the call when they're at wits' ends or just about to just throw in the towel, and it's usually I just keep getting stopped out. The trade then, as soon as I get stopped out, the trade goes against me. When I ask about how it is that they're setting stops, we just use one here, right, for a long-term investment, whole different than a trader mentality out there. But when you are using a trader mentality, when you do exit something, your stop has to be in a volatile market. Many people think I need a tighter stop. Nothing could be further from the truth. In a quiet market, tighter stops are okay. In a volatile market where we have huge swings, which is the type of market that we're in right now, you need wider stops. And wider stops versus smaller stops, the only thing that it changes is how many shares you're buying, because you're only risking 1% out there. So make sure all of my subscribers, they always take access or always take use of the position size calculator. So what I just went through, verbally with you, I have a little calculator that allows you to do that. It allows you to really punch in the ticker symbol of nearly anything and find out what the average true range is. Your stops, if you're going to trade something, like if you were trading SNH, your stop's got to be outside of 30 cents. 30 cents is just the normal range from high to low. If you use a tight stop on something and get stopped out and the trade ends up going in your direction, most of the times it's because you used too tight of a stop out there. So don't do that. Okay, enough about that. Let's not belabor that anymore. Let's go take a look at Starwood Property Group out here. This stock does not look anywhere near as good as the one that we just took a look at. This has got three significant areas of resistance out here. 2139 is the one that we're dealing with. That's from the gap down from September 28th. This had 4 million shares on the way down. That window has not been repaired. It was up on 2 days ago, October 7th, with 1.4 million. Yesterday, 1.1. Today, 830,000 shares. This does not look as good. I see no sign of strength or anything off the bottom out here. So if you're looking to get in on this, we just don't really have, I would say, the best potential trade on this today. As of 1:38 p.m. Might change at 1:40. It would be a test of the September 29th swing point. Doesn't look like it's going to be able to bust them up. Maybe it's going to get down there and try to bust them to the downside. You'd also want to take a look at what's going on a weekly basis inside this equity, see if we can find anything out here on a weekly basis. And the answer, I don't even see, I don't see any bullish reversal signal or anything. On a weekly basis, this thing gap down last week with 15 million shares. This week, you're up with 6 million shares. Looks like Starwood Properties has got further to go to the downside out there. Have a question of the den if I would take a look at FANG, F-A-N-G. So we will indeed. Now, FANG is Diamondback Energy. Let's see, we've got the weekly chart up on our screen. Let's just see if there's any tests of any areas that are important out here. And FANG was testing the December 2014 swing point weekly. That had about 12 million shares. Tested the first time with 6 way back into July. Tested again in August, that 24th, with only 7 million shares. Rejecting the swing point with 11.9. That's a rejection. That's a failure on price and volume in last week as well. So it looks like FANG has turned the corner on the weekly chart out there, and that's what you like to see. Now, just for the heck of it, let's go see what its market profiles are doing. It's up above daily and weekly out here. So that is bullish as well. So any close today above 73.48 says that this thing is, FANG is going to go ahead and run to its highs, and its highs being the April 20th swing point out here, somewhere between 79.45 and 85.81. That's what the weekly chart says. On the daily chart, looks like we've got an A to B equals CD to the upside. Let's go take a look at it and see where we're at in that pattern. Now, a little hammer candle down here on August 26th was the A point. This little swing out here on September 17th was the B, and the C point down here is September 29th. It has made, let me turn off the boxes, the TAS boxes, made the 1 to 1.272 A to B equals CD, but this is a strong move on this C to D leg. So this says to me it's got higher to go. And it looks like it's actually on a daily basis is probably setting up a Gartley sell pattern out here. So let's go check in on that. Yeah, it's at this 0.618 retracement. That's on a daily chart. That's off of the swing point out here from April 20th, 2015. So we've got the conventional HM Gartley sell pattern out here, but no sell signal. Without a sell signal, that being a bearish reversal pattern, this says that FANG is on its way to $80.49, and that'll make the 1.618. It does look like to me FANG is making its way all the way back up to that top to make a 100% move of a move. But, same rules apply with regard to, I don't know whether it's long-term, short-term trade. Just simply use those same techniques out there. It's all about position size, and if you do that, even if you're wrong on the trade and you lose 1% of your working capital, you can recover from that. Where you can't recover is you start losing 2, 3, 4, 5%. You lose 5%, you only have 20 trades out there. Mathematically, on 1%, if we just always are risking 1%, you have to have 363 losing trades in a row before you basically get down to about 0 out there. And that is likely not to happen. Most people don't have that kind of temperament out there. So that's on FANG. Now, Goldilocks. We got to go take a look at Goldilocks because Goldilocks is looking beautiful today. It's up $12 at 1156.40. I think that's a really key number. Let me see. What is the number out here? The key number that Stevie's looking for is 1156.40. Son of a gun. Trading right on it. I hate that. I want to see it close at 1156.50. Just give me a nickel, 45. Just give me a few more cents out. Give me that nickel that we picked up off the ground out there. Why? Because I want to see it clear that September 24th swing point out there. What else is gold, the contract doing? Oh, I like this, though. Okay, I can live with this. I can live with a close inside of 1148.50 because that says you're going to close inside that August 21st swing point. And if you do that, it says you ought to at least go up and test that. The reality is that we can see that gold has been trading inside the Get Smart cone of silence out here. Now, whenever you are trading inside a cone of silence, we can take a look at when we break that apex, go back to the base, which means I could go back probably to the July 24th, but I like to take the more conservative approach and just take the distance of the base of the snow cone out there. And who doesn't like a good snow cone? Well, this is a good snow cone because this snow cone says gold is very likely headed to 1222.60, give or take a few shekels out there. That would go ahead and set gold all the way back into the June, beyond the June. That would take us back into, it takes us right back here, back into the May 18th, 2015 level out there. So that's what we should expect over time. That's the pattern that is in play out here right now, and that is with regard to gold. With that being the case, the miners are off to the races out here. Let's go take a look at a couple of those strong puppies. Let's go take a look at Rand Gold Resources. GOLD looks like 100% move of a move out here, getting back into that key reversal bar, bearish engulfing from August 21st. Now, that had volume of 1.4 million shares. You're into it on a little bit lighter volume is what it looks like, about 1 million shares as we speak right now at 143. So this could be setting up a time to rest. Now, if this is setting up a time to rest out here, it won't rest. If gold takes off, I don't care if this is made 100% move of a move. She is going higher out there. It's really going to be all about what's gold going to do. But if this is going to rest, your next buy, place to add in on Rand Gold is going to be $62.44. That's what it looks like as we speak right now. That's your bottom of your daily box, the top of your weekly box out there, and that could turn out to be a nice trade, but it's going to be dependent upon what Goldilocks really wants to do out there. If we go take a look at Agnico Eagle, AEM up $1.23 with not 22 million shares, but 2.2 million shares out here. This had already made the 1-to-1 A to B equals CD. It's just simply trading sideways and dealing with another trend line that it must contend with. That trend line taking us back. In fact, I remember it takes us back so far that I'm not even going to go back on my chart out there. It'll just clutter things too much. And who likes clutter in their life? In any event, that is the trend line. It's a long-term trend line that it's trying to go against. Its most recent high was with 5 million shares. You're going to be light today. It's just simply, it's really waiting for gold to just tell tell all of the other miners that it wants to take off. Speaking of other miners, let's go take a look at GDX out here. Let's go see what the overall sector is doing. The sector not as strong as some of these individual names. The sector making a 100% move, getting back to that August 21st swing point that had 84 million shares. You're into it with 31 million shares. So light volume, but still looks pretty good. As long as gold stays strong, you can expect these miners to stay strong as well. Let's go take a look at light sweet crude. Let's take a look at light sweet crude. That's up a whole nickel. There's that nickel again. Now, light sweet crude had broken out of its own cone of silence out there, and we're able to just simply take the base of that cone, which in essence was going from the low on September 2nd all the way up to pretty close to the high on August 31st. And so light sweet crude is just slowly making its way to the $52 area. And if it can get about $52, it ought to make its way back to about the $56 and change level. And that is black gold, Texas T. Let's take a look at natural gas. Natural gas is supposed to make a bottom sometime in September. Well, it didn't do that because, hey, we're already into October 2nd, pretty close to September, where we saw its most recent low out here. So seasonally, I don't know. I don't see anything really good when we take a look at this pattern. Is really good. Is that very good grammar when you're speaking about an instrument out there? Probably not. But I just don't see anything that looks very good when I take a look at natural gas, at least on the daily chart, other than knowing natural gas forms a bottom in the fall. And we're certainly in the fall, with today being October the 9th. Let's look at, hey, Apple. Apple's getting its act together out here. What's the deal with that? It's really not getting its act together. It just happens to be up $2.40. But that means we should go see what's going on in NDX land out here. So as we do that, the NDX is really the cash indice to kind of tell us that the trend to the downside is over. Kind of back to that question, do I think we'll go visit the August 24th level? If the NDX 100, one of the leaders to the downside out here, is really able to close above this trend line, I don't recall who asked me in the den, but whoever did, if the NDX is able to, we're taking the high in the NDX that took place, its all-time high, July 20th. So that, in essence, is our touch point. I'm using September 17th. You could use something, a little bit higher than that, but I'm using September 17th. Pretty important swing point out there as our touch point. We can see that price is really right on it. Earlier in the day, the NDX was higher. Maybe it's going to close that way. I don't know. But if it does close above it, much like you and I have taken a look at gold, if it closes above it, comes back, tests it, and rejects it, then guess what? Then the NDX 100 could actually be forming an A to B equals CD to the upside out here. Now, in order to do that, it's really got to get some legs, and it's got to close above 4450.66. But if it does that, then you're looking at a very strong, well, you're looking at a move all the way back to the highs. All the way back. I'm pretty sure it's all the way to the highs. Let's take a quick peek at it. Let's do that. Let's do it someplace else. Let's not mess up this screen out here. Let's go to, there we go. Let's go take a look at it this way. Let's go, should we look at the Qs? Yeah. Hey, let's go look at the Qs, because the Qs in essence would have the same pattern out here, right? So in the Qs, I mean, it's going to be slightly different because of dividends and so forth. But if we take a look at the Qs, we go back to the July 20th date. We can even draw a trend line, and let's just go see for giggles out here. Let's just go see where that red line is. Where that takes us to. Yeah, okay. It's close enough. There's a September 17th. Lock of that in place. So we can see we're trading really right into it. Now, volume-wise, inside the Qs, it's going into September 16th. September 17th. That's got 56 million shares. Today, you're up with 17 million shares. Folks, what you want to see if you're bearish the market is a number of 17 million shares. Now, it's not going to be 17, but let's say 23, 24. Not one day, many days. Many, many, many days. The Qs need a lot more lighter volume than this over a period of time to make any kind of significant high. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. I happen to have a chart up during the break on my screen out here, and one of the folks in the Tigers Den asked me what it was, so I will tell you what it is. I'm taking a look at the S&P 500 daily chart. That's at the bottom left-hand portion of my screen. New York Stock Exchange, bottom right-hand portion. The upper level is what I refer to as a short-term price oscillator. You know, you've listened to the show long enough. You know, we take a look at some longer-term price oscillators when we're looking at the New York Stock Exchange average in the Dow and the NASDAQ composite. This is a much shorter term oscillator. It's really taking a look at the difference between two moving averages. But it works really well out here at helping us to understand when a impending top is forming. And if you just look at the, now I've inverted this, if you take a look at the lower line, the red line on the upper panels of my screen, you can see when this oscillator dips below it, and I've got some red arrows that identify where those occur. It's the signal of an impending top. Now, it doesn't have to, it's not used as a timing tool to the day, but it's a really good weather forecast to help us understand when you should anticipate a top. And really, you know, trading and investing is really all about anticipation, right? It's identifying patterns, reversal signals, setting stops, making sure you use proper position sizing, all those types. It's just a little checklist out there. And if you do all those things, you're going to do just fine. So there is an impending top that is coming. This is more than just, you know, anybody just saying willy-nilly, you know, I can say, yeah, there's a next top and a bottom out here. No, this is more than that. Now, is it a top of significance or consequence out there? I don't think that it is. I think that it becomes one. Now, that doesn't mean you can't play to the short side. I just believe that at this stage of the game, unless things change, that this really sets up your next buyout here. And I can tell you, if you just go look at the Association of Individual Investors out there, it's pretty much at a draw right now. The spread between bulls and bears, there's not a whole lot of people that are convinced one way or another on this market out here. But I believe that many of the signals that we looked at, or that I look at out here, are saying this market has got further room to the upside. And we'll do more upside right now than we will downside action, which was why I answered the question the way I did about August 24th, that we're not going back there. That doesn't, you know, like I say, that's what the charts say. And as soon as the charts say something else, then I'm game for it. So what do we? And speaking of the summation index price oscillators out here, you know, if we take a look at a longer term oscillator inside the New York Stock Exchange, such as this one, yesterday getting up to a reading of 303. Man, I'm telling you what, that is strong. Now, look, I am not going to discount the possibility that the market is trying to deceive us, trying to deceive Stevie's son. It could be. And I recognize with a move like we have had since last Friday, it could be some version of a blow-off top. I mean, it really could be. I get that. I accept that. You know, the New York Stock Exchange closes below 10,244 today. 10,244, and I'd say, yeah, that boy, what a sucker punch that was out there inside the markets. But that's not likely to happen right now. It may happen, but that's not likely to happen. When you see a price oscillator like this, the next high is not going to likely form until we see a descending price oscillator and rising price, or some other pattern that would set up. But you're talking about long and strong as far as New York Stock Exchange is concerned. The NASDAQ earlier in the day was able to get up above its 65 level. Plus 65 is a extraordinarily strong market out there. But we took a look at the NDX 100 up against a trend line. That's why I say that trend line, and I look at the short-term price oscillator, it really does suggest that turn, that retracement ought to be coming to a theater near you. Folks, it's the end of our show. It's the end of our week. Have a great weekend. It is game day tomorrow, and I'll look forward to catching up with you on Monday. Have a great weekend.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.